Hey guys, and welcome to today's Ask the Advisor show. My name is Mike Desepoli from Heritage, and for any of our new subscribers out there, in this show we give you the opportunity to ask us any questions that you want from the investment world, and we'll do our best to give you a good answer. Today's question comes to us from John in Sarasota, Florida. John asks, what is a target date mutual fund? Well, thank you very much for the question, John. We'll be happy to answer that for you. Target date mutual fund is a special kind of mutual fund that we generally see very often in group retirement plans. If anybody's recently enrolled in a 401k or 403b at your place of work, a target date mutual fund was likely one of the choices that you had. The way a target date mutual fund works is they take a standard investment structure like a mutual fund and they put a target date or an objective retirement date attached to that fund. Here's how it works. Let's say, for example, you're a new enrollee in your 401k and you select the target date 2050 mutual fund. So the objective of that fund is to prepare a person for retirement for the year 2050. So the further we are away from that date, the fund is going to be more aggressive. So here we are in 2017, that fund is going to be very aggressive in style. As we move closer and closer to 2050, the fund is going to rebalance and become increasingly more conservative, with the idea that as we get closer and closer to our retirement age, we want to take less and less risk, so we don't put to risk the capital that we need to live on in our retirement years. Now, a target date retirement fund is not a perfect science. They don't create a fund for every single year on the calendar. Generally, even years only. You may see a target date 2030, 2040, 2050, and so on. So if your expected retirement date doesn't fall exactly on an even number year, you try to pick the fund that's most appropriate to what you're seeking to do. Now, target date funds can be a great alternative for a new investor. They're not sure what investments they should pick just yet as they start to build out their 401k, so it could be a good place to start. However, there are potential fallbacks to using a target date fund. Let's say in the example I gave, you selected that 2050 target date retirement fund, but you worked 15 years past your expected retirement date. Well, the one thing you need to know is once a target date fund reaches the actual target date, it will be entirely in cash. Won't be invested in the stock market anymore. So if you're not paying attention very closely and you continue to work past your expected retirement date, your fund is going to be sitting there earning nothing. And worse, you'll probably be paying fees on earning nothing, which could lead to a negative return. So that's a target date fund. If you have any questions that you'd like us to answer, we'd love to hear from you. Send us an email or send us a tweet, #AskTheAdvisor, and we'll do our best to get right back to you as quickly as we can. Thanks so much for tuning in. Keep an eye out for next week's show.